Okay, can you hear me now, Thorns? Please fix the mic. I must have touched it. It's very sensitive. I've got a lovely Shure MV7 here. Thorns, can you hear me now? I hope you can. I was saying basically the rally in the market for oil has been based on a report in the Miami Herald that the Trump administration is looking to strike inside Venezuela itself, not just shipping in the sea, but actually inside Venezuela itself. So Thorns, yes. Okay, I must have touched it and when I've plugged it into my workstation here. So it's a nice green light now so I can see. Right, let's get rid of me. I've just realized I'm still massive on this screen. You don't want to see my bald head. Let's just move that down, make the charts a wee bit bigger. So there we are. As I say, I was just basically saying, Thorns, gold remains weak. Oil remains weak. We can't, even today, we can't get back in that 62 channel. So don't get too excited about this rally today. I don't know whether you trade oil or not, Thorns, or anybody else. But let me know. Thorns, if you're interested, let me know a particular asset you want to trade. And we'll have a look at it. But let's just go through them all ahead of well, there's no real data today. Obviously, the core PCE was expected today. We have had some data out of Europe, inflation data, some German data, some Chinese data earlier on, but we'll have a look at that. Actually, let's do it now because we're going to go through the week and the month later on as well. So last day of the calendar month, hotter inflation, PPI. Remember, that's Producer Price Index. It feeds in to the Consumer Price Index. So hotter in Australia, 1.0% from 0.7%. Of the primary reading of that on a annualized basis is 3.5 from 3.4. So another sign of hotness. More weakness confirmed, but continues to roll out in China. Disinflationary manufacturing PMIs under that key 50. Remember, 50 is the tipping point from a sector that's in contraction to a sector that's in expansion. Manufacturing PMIs 49 from 49.8. These are the official ones. Non-manufacturing or services in other languages are 51.1. So just about in expansion, but really, really moribund. Quite a spike, unfortunately, for many people in the UK in house price inflation. It had been falling quite significantly. It's coming higher than expected, but weaker than last time, except the annualized number is better, stronger than last time. Retail sales in Germany in line with expectations. French CPI also in line with expectation for the monthly reading. It's not a big deal. The key number was the overall EU-wide area, and again, a bit hotter than expected, 2.4%, expected to have slipped to 2.3%, so no change there. The key core reading, 2.1 for the annualized headline number, which is what, obviously, the target area is 2%. That's what Ms. Lagarde talked about yesterday at the ECB no rate announcement. Thorin's asking about Bitcoin. We'll come to Bitcoin in a minute. Bitcoin, I think it's done for the next few months. What do you think? Well, as I said, I've been saying on our little videos we do once a week. Let's just go to the charts as you've asked. It's maybe. I don't know. It's traditionally quite a strong time of the year, Thorins. Sunday, the 2nd of November, in 2017, 8 years ago on Sunday, Bitcoin was. Tell me how much you think Bitcoin was trading at on the 1st of November 2017. Somebody tell me. Pune, I'm very well, my friend. I was just asking a question of Thorns, who was asking about Bitcoin. In 2017, 8 years ago, how much do you think Bitcoin was trading? I mean, don't look it up. Just have a guess. Obviously, I'm going to say you're going to Google it, but you don't. Everybody chat GPTs now, don't we? But on the 2nd of November 2017, Bitcoin went through $7,000 for the very first time. So here we are worrying about it, not being able to hang on to $112,000. $112,000 on this chart, Thorns. Thorns. I don't know why I keep saying Thorns. It's Thorns, isn't it? Thorns 14 and Pune. 6K. Yeah, it was 6K. I don't know whether you looked that up or guessed it, but yeah, the 2nd of November was 2017 was the first time it went through 7,000. It had a stunning 2017. On the 1st of January, it was less than $1,000. And it had a massive rise. It went from $1,000 to $7,000 in that 10-month move, and it had a strong end of the year. Anyway, I was saying traditionally it is quite a strong time of the year for crypto. Bitcoin, obviously the major leader of them all. So yeah, your comment was, I think it's done for the next few months. Well, we'll see. It's still way above where it's been. We had this massive breakout and the rally with the stock markets from the April low, the what did he call Liberation Day low, where we went down to 75,000. We have struggled around to hold the 100,000 at some point in this year, but we've got some key horizontal support areas. The 106, 107,000 channel has been a key support during the summer. You can see it there, 107,000. That's summer support, and into the fall as well, into the autumn, September time. So 107 is providing support. 112 has been my pivot area I've looked at, and we looked like last week we were doing quite well. We had this 4 or 5 consecutive days higher. We had a strong weekend, and then we rolled over quite significantly the weekend, and again next week. It was just a failed rally over that my 112 here, and down we go. So it's still bid. So this is the daily, so it's channel bound. So me as a trend following trader, that's not doing anything for me. It's chopping around too much. This strategy, this setup here, guys, the Bollinger Bands and the stochastics set at 10.63. It's very, very simple setup. We look for a cross of the K and the D line on the stochastics, the orange and the blue line here, and we look for a touch on the outside of the Bollinger Band. So what are we seeing? So we crossed here on the last cross, which go through the crosses on the Bollinger, and see how this is done on an end of day base. So you can see it crossed on that day there. So this strategy, so we first touched the outside of the Bollinger Band here on the 2nd of October, but this strategy wouldn't have actually shorted the market until, because it was still going up. It's had a strong run, and you would have been long from this point, and that would have been taking you out because it's touched the other side of the Bollinger Band. So now you're looking for a short. That's the short. You would have got a short entry at this point here. On the 7th of October, 121,000. And the way this strategy works is you target the midpoint of the Bollinger Band. So target would have been 116,400 from 121,000. And then actually on the same day, it would have been taken out. So the massive volatility on that Friday when Trump didn't get his Nobel Peace Prize and threw the toys out of the cot. We had this massive tank in assets in the stock markets. We hit both target 1 and target 2 on the same day because we crashed through there. So that would have been, unusual, but it still would have worked out. So what's happened there is, so it's gone through there. It's then touched. We're now looking for a long position. So the long position, because we had another touch of the outside of the Bollinger Band, we're now looking for the blue to cross above the orange. It's very weak in these days here. And it's not until that day there where we've got the diversion of the K and the D line. So we'd have gone short there and been successful. And then on that day there, this one here, the 23rd, you can see where we've got the let's put that. I should move the line up a long corner. So you can see here on the 23rd, we've then gone long. It's got to target 2, which is that's my key 112,000 again. Target 1. On a few days later. Obviously, the stop loss would have initially been down here, trail it up as we move up. We'd have probably had it about here on the day we went to target 1, and then we'd have been stopped out because it didn't get to target 2, which is the other side of the Bollinger Band, and it's gone down again. So we've crossed short again. So this then here, this is a continuation to the downside, because remember that the pressure is a channel bound, but the bias has been to the downside this week. So that would have gone short there on the 29th on the same long price that we went long on there. You can see that sorry, let's move that, because all these lines Trade Locker doesn't let me have all the lines on my charts I want. So on the 23rd, we went long, got to target 1. Target 2 didn't get hit, so we were doing stopped out for target 2, but still a winning trade. And then we're short here from the 29th. And we're looking for target 1, which is to touch the outside of the Bollinger Band down there, about 105,000 at the moment. So that's how this strategy works. It's a mean reverting strategy. Works really well. Lots of assets. I use it most mornings when I'm trading. The DAX is my favorite, and we're going to have a look at the Dow. In fact, we've missed the open, haven't we? Sorry, I've been talking too much. We're looking at trading the on, but we'll have a look. We'll go have a look at the what the Dow looks like into open. Okay, guys, if that's okay. Punet. Oh, you did it without looking, Thorns. Oh, very congratulations, man. I've just seen your comment there, Thorns. Well done. So nice one, my friend. Yeah, 7,000 on the 2nd of November, 2017. I just remember that really well. I had a little, I did a little chart for the broker I was working with at the time, and I've kept it in my pictures. Let me show you. I use it sometimes on my. I've been using it this year actually. I think I showed it with people yesterday, but there we are. That's the little thing I did. This little hand. There we are. So there we are. 2nd of November, 2017. First went through 7,000. 20th of October, first went through 6,000. Took 8 days from 5,000 to 6,000. It's a rocketing year. And as you can say, 4th of January, first went through $1,000. But you're right, 6,000. We were still at, so 7,000. So yeah, I mean, if you've been in the market since then, you've had Bitcoin since then. Hopefully, you've still got some of it. You're happy days. So anyway, if you're investing or trading, two different things. Obviously, it's not going away. Digital currency. She talked about it yesterday, Miss Lagarde at the ECB's digital euro. So lots of arguments, obviously, within the EU as ever. But she's, they're pushing ahead with it. It's not going away, and they're processing and moving forward with the digital euro in 2 or 3. I think 2029. I think they were targeting, but obviously a lot of discussions to get through before then. So anyway, yeah. So Bitcoin technically short with this strategy. If we go to a trend following strategy like VWAP or the EMAs. Mahayana Ashi candles. He can see that's the 5 minutes. Just check that out. Got the same time frame we were just looking at. You can see it's been long earlier last week, and then it turned short quite aggressively again on the 29th there. So it'd been long, now went short, and this is very short. I mean, ignore the VWAP on the daily. It's the 3 minutes, so it's not really relevant on the daily, other than to say that we closed under it on the day and we've been under it yesterday, and we're sort of bouncing a bit off 109,000 so far today. For completeness, the other layout we are currently using is the crossing EMA strategy. And again, that went short, having been long earlier last week on the 29th as well. So all three strategies, both the mean reversing and the two trend following strategies, are short on an end of day basis for Bitcoin. But you can see here on the quite support zone through this 107,000 level. Again, you don't need me to there we go. You can see that box zone there through that 108, 107,000 and 6,000 zone from the summertime as a support area. There we are. So we breach under that. It's looking quite weak. It may hold. It held here in August. It's interestingly the end of August here, and the middle of October, near the end of October. So triple bottom potentially is a bit too far apart, and obviously we move that further over there. Just stretch that out. It's not going to. It is. There's that through that pivot. What was that? As I was saying before, early summer, it was a pivot area, wasn't it? 107, 106,000 zone. So that breaks there. You can see that. We then got, three other lower areas, 103, 102, and then the key 100,000 itself down here, which we went to towards the end of July. So it's not looking great, but it's looking a lot. If you've been in this any length of time, it's looking okay. It's just a bit of a messed about chart, and obviously it moves much more with much more volatility than many other assets. But that's how people like. That's what attracts people. That's a huge, you see here, a massive ATR. Remember, it's the average true range. So this is typically how far the asset that's on the chart moves on it. In this case, on a daily basis, because it's the daily chart, and you can see here currently the average distance the Bitcoin travels is something like $3,800 per day, whether it's going up or down. The range it moves, and the beauty of the ATR, the average true range, is it captures any gaps, and you can get some significant gaps on things like the Bitcoin market in particular. So you see it's all smoothed out here because of weekend trading and weekend candles, but obviously some markets you get massive gaps, and so anyway, I say on a short-term basis it's short, big support 107, 106. It's not something I particularly trade on a basis, but time flies, certainly does, Thorns, myself, my friend, but keep smiling, keep trading, keep doing the right things, and time is the same, whether you're a multimillionaire or you're a peasant and you're just starting out, a poor guy, poor trader just starting out. You're still only 24 hours in the day, so make the most of it. We're only here, whatever you believe, we're only here as in flesh and blood form for 80, 90 years if you were lucky. So make the most of it, my friends. All right. And money is simple and enabler to do what you want to do, freedom. And that's what trading gives you. There's no other business in the world that can give you the flexibility, the freedom, that beating yourself, beating your mind, understanding yourself, being disciplined, being patient, being not too greedy, not too scared. Don't try to scam people. Don't try to try things on. Be sensible, and there is absolutely no ceiling to it, and that's the beauty of prop trading as well. We give you the ability to open up all sorts of avenues for yourself. Prove it with these demo accounts, simulated accounts, call them what you will, but prove it to you and to us, and that you can do it. You get to the funded account stage, and the world is your oyster then, because you can take home 70, 80, 90% of the profits with some accounts, with our Express accounts, Pro accounts. 90% of the profits you make are yours, and we're very, very proud about our payouts and how quickly we pay people, and how clear we are about the rules. There's no funny rules here at the Prop Trade. So take care, everyone, and we'll see how we go. So back to the markets. Let's just go back to the indexes and see what would have happened or what might be happening where we've got some interest. I just go through are on the indexes. The Nikkei is the only other position, the only index trade that's still open. We've had a really good week this week on the Dow and the Nikkei. Nikkei's half closed, which monster mover, 1.6%. Earlier we had a 2 and a bit percent move on the Dow as well, 500 odd points, 400 points on the Nikkei. So the one that's still open is the Nikkei position. So that's been dragged up again this morning, 51,400. I think I said, I'll come back to the trading in a minute. I think I'd said, yes, I think we'd moved it last night to 50,700. Yeah, I haven't actually updated. I don't know if you can see that, guys, but last night I'd updated stuff. So no, it wasn't last night. It was yesterday morning. 50,771 was the last update I had for you on Nikkei yesterday. That's been let's get rid of that Trump story. We're now at 52,400. So my stop loss from the 20th of October is now at 51,400 in 2020. The other big thing about trading with the proptrade.com, guys, there's no like overnight charge. Remember, if you've got futures, you obviously got if you're a futures trader, you got to pay your broker If you're a CFD trader, you've got to pay your broker overnight charges for having positions open. I haven't paid a penny on this, and it's been open since the 20th of October, and it's just continued to move with me. So I've just dragged up the stop loss. Stop loss is obviously all the way down here at one point through the entry. I think it was the 20th. Well, I've got in round about here, didn't we? I think that's why the blue lines there. Yeah, 20th night. Yeah, 20th. That was our entry here. That 10 o'clock at night there on the 20th of October. So we were out with the money for quite a while. Obviously, stop loss was all the way down here, but it moved up. There's the gap we had on the 26th following Take Amici being Prime Minister. The yen tanked, stock markets continue to move higher. And we just continue to move higher with the trade deal this week, the big buddy meetings between the new Prime Minister in Japan and the boss man himself. And off we go. We've just been rocking and rolling. So I'm just pulling up that stop loss, locking in profits. And that, again, from a mental point of view, guys, from a mental trading point of view, that is such a comfortable feeling, isn't it? I cannot lose this trade. I can give back some of this profit if it suddenly turns around in the next 5 minutes, like we had on the Dow earlier in the week. I don't know if the line, I think I took all of my, oh no, they're still there. There we are. So the same thing was here. We had two positions here on the Dow from the 20th. And our target one was here. Target 2 on the second trade was here, and target 2 on the trade. Sorry, stop loss on trade 2. I'd pulled it up, but we just got spiked down here on earlier this on the 29th. And then yesterday we bounced back through it and said, "Oh bloody hell! Why did I pull it? Why did I get so close?" Don't beat yourself up. Yes, you didn't get the top. Nobody gets the top unless you're gaming the system, or you got insider knowledge. It's turning around at 48,000. Obviously, it's a big round number. A lot of people will have got out at 48,000. Don't get me wrong. But we retraced quite aggressively, and we're still hanging on to where we got out at 47,500. It's around, happened to be another one of my those round number things. So anyway, that's what happened with the Dow. It's a very positive trade, and again, Nikkei, and sleep at night. Don't have to worry about what's happening. Just follow the price action. We're in the upper half of the Bollinger Band. The green candles, the positive bodied candles, are much bigger than the red candles. So stay on board until things turn around and while we get stopped out. So I'll be dragging that up later today. I'm going to leave this. I'm probably going to leave this one open to take me into November. I'm not going to be doing much trading in November. I'm away on holiday for 2 weeks. I'm actually going to Japan to see the Deaf Olympics with my niece is playing basketball for Australia. Very, very proud moment for us all. And so we're off to Tokyo on the 11th. Not much trading in November. We've got a winning October, having been very much out of the money the middle 2 weeks of October, 5-week month October, but we got back nicely this week, significantly this week. Huge 1,200 points up as of last night. And I've locked in some of the trades I took last night on the Forex positions as well. We'll come to that as well in a minute. But anyway, so yeah, I was just talking about the psychology of having a stop loss way above your entry. That's really, I've definitely won all that or most of that. Obviously, spreads take some of it away. But anyway, let's crack on. Anything you want to have a look at, guys? So anyway, I was going to talk about trading, wasn't I? Down to the 5-minute time frame. So what's going on in the higher time frame? Well, the 4-hour time frame is down, isn't it? That's negative. It's under its Bollinger Band. We're very much sort of sideways action on the 4-hour. The 1 hour also, dear me, chopping around and really boring. I'm not getting involved in that. It's not doing anything there. But where did today start? Well, there's the 31st. The top is that level there. We did spike a bit higher here, just ahead. So let's just put this on for the day. So that's our pre-market high our pre-market low before the markets open. Remember, they've been open 15 minutes. The US puts its clocks back this weekend, so we're going to go back to being 5 hours behind London, 5 hours behind New York. We're only 4 hours at the moment. That's our pre-market low, 47,470. Pre-market highs, 47,650. Say 5 points. So, but that they were extremes. These were extremes of the wick, even on this 1 hour time. So not a lot of action. The current hourly candle, which is still got 10 minutes to close, has obviously spiked and into the pre-market low. So it's biased to the downside, this current hourly candle. So 5-minute chart might be all over the place, but let's have a look what 5 minutes is telling us as far as this particular strategy is concerned. So we've been long. There's the cross there, or there. In fact, you wouldn't have got, you wouldn't have got in that until then. So that's gone short at 12.35 is the last position on that one. Interestingly, having just put in, remember we put in the pre-market high, there's that pre-market high. So this strategy would have gone short there. You've very short target has gone, then it's gone against you, but your stop loss is still back up here. And then here we've got to target 2 at 12. So we've got in here. Let's just do this. Very simple strategy, this, guys. Anybody can play with this and make money on it, more importantly. So that's the entry. Let's change the colors, make it, what color should we make it? Make it orange. No, the other one's orange. Green for go. So that's green for go, 47,600. There's target. Stop loss would have been up there initially. There's target 2 down here. So we got in at 47,600. Target 1 is 47,589. So, still 100 odd pips. Obviously, the spread on the Dow is a bit wider than most. And then target 2 is what there, 47,450 is where the bottom of the Bollinger Band is, where we spiked through it. So we've got in from 47,600 to 47,500. So 100 points on the Dow in less than half an hour, and it's continuing to move to the downside, isn't it? Although this strategy would have, having taken the short, it then it dips and then it crosses here to the upside. So that would have taken you long, in fact, and you've stopped out there if you'd have taken that. So that's on a negative candle, which is always a bit weird. It seems to have gone long there at right on the open. Okay, so I would have, I always say about wait till it calms down. I would not have taken that, given that it was a negative candle and it was it was the opening at 1:30. So what's happening? Well, it's moved down again, then it's moved back up. So it's classic volatility. I'm messing about with the price action. So unsurprisingly, this happens quite a lot, guys. That's why I always put on the pre-market low, especially if it happens during the European session for the Dow. We went to test the low, so some would have still been short this to try and I had a target down here towards the lows. See where the low was there, 47,485. The candles, the wick took us to 47,472. So some would have had that shot. That's been filled quite now, but then it's been immediately returned. It's bounced back, and that long there. But you would have been going long, aren't I? So my stop loss would have been probably down here. Yeah, would have been stopped out on that initial long, but that is now been the initial short is reversed in that first 10 minutes of the open. Watch my scalping strategy webinars, guys. I put the pieces together of this first 30 sort of opening hour of the trade. So that would have triggered a long, because we're still long here. So it would have gone, that has not worked, but it would have gone, I would have gone long there. Or it would have, it would have triggered. That would have been at the open. That would have been losing trade. That is now an entry at 47,568 there at 15 minutes into the open now at 13.45. and that is obviously first target's been hit, and that's still long. Stop loss is still, well, I want to pull it up just yet, but stop loss is around the bottom of this candle. We'll see how that candle finishes in a minute, but it's already hit its first target, so that's long. Punet, sorry, my friend, I've just seen your message. Punet saying, do you suggest looking at Dixie or the other currency indicators for correlation? Absolutely. Remember, Punet, we don't, not many people trade the dollar index. Okay, so the liquidity isn't great, but it's obviously an indicator of how strong or weak the dollar itself is. It's created only about the Dixie. The is only 6 cross currencies with the dollar. And the euro dollar accounts for over 50%, 56% of the value of the dollar index is the performance of the euro. So it has which is fair enough, as a significant weighting. But there's the CAD, sterling's in there, CAD's in there, the Swedish crowns in there as well. So the 6 currencies that create the Dixie. Both Reuters and Bloomberg have a wider dollar index, which is a bit takes in more currencies. But yes, I mean, they just look for correlations. The other thing to do is to look at something like I quite like this site as well. It's, again, if it's free, if you're new, it's a free site. It doesn't cost you anything. From Baby Pips. They've created something called the Market Milk, which gives you a currency strength indicator. You can buy these things, but they take up a lot of resources on your laptop or your iPad, if you're using an iPad or whatever it is. But it gives you an indicator of who's strong, who's weak at the moment. So at the moment, the yen and the dollar are strong. That's to do with the thing I talked about at the beginning about the worry about an attack on Venezuela. These are what we call safe haven currencies, and the Kiwi and sterling is the weakest today. That's literally now at the moment. You can do this. That's today. So the biggest mover today. I mean, they don't move much the currency marks, but you can see dollar CAD is up 0.3 of 1%. Biggest loser today is the Kiwi against the yen, down 0.38 of 1%. So this is quite a good finger idea of what's going on. So you'd look at that. The yen's strong, Kiwi's weak, and that correlates to this being the biggest mover. So what I've done in the past is looked at this at certain times and then gone to that and see if there's any more movement available on that particular currency pair. Obviously, yen, Kiwi, yen. All those traders, New Zealand certainly on its weekend. The Japanese market closed hours ago as well. So there's no major banks open in either New Zealand or Japan at the moment. They're very much on their weekend, so there won't be much liquidity. Obviously, there's liquidity from the London market and the New York market, but the major buyers and sellers, the home countries of these currencies that's moved the most today, aren't in place. So, bear that in mind as well. But yeah, I mean, that's another way if you want to have a look at that. So that's Baby Milk's the Market Milk on Baby Pips, a nice site, Punets. So yeah, I mean, the dollar index is, it gives you an idea of the strength and weakness of the dollar. I mean, it is still, I think I could find it over on my Yahoo site here if I don't. I just put in the Dixie here. I think it's still. Is it still over 100? I haven't actually looked at. There we are. Dixie dollar index. What happened to it? I've used Yahoo ever since I started trading, and it's just habit, I think, more than anything. The dollar index isn't coming up for some reason. There we are, 99.82. So, it's been over 100 for a long time, and that is still a relatively strong dollar. If we look at the 6-month trend for the dollar index, you see it's not really, it's been relatively weak, but it's not doing a great deal. Year to date, so from January to October, it's had a bad year. We're all the way up here at 110, and we've been as low as 96, and we're back to 99. So, and this week it's been sort of more or less coming back a bit. Oh no, it's not this week. Yeah, that's this week. So it's back again, psychologically, 100 is a huge psychological level. So again, free stuff on Yahoo, and lots of other stuff on Yahoo. I still like Yahoo, it's a bit long in the tooth, but works really well. Really well. Look at this, Amazon plus 12%. There were 13% in the pre-market. Amazon market really likes their earnings last night. That'll obviously lift the or help hold up the tech stock markets today. So anyway, that's Amazon. Sorry, Amazon. That's Yahoo for you, Punet, if you want to have a look at it. But yes, obviously look at the correlations between the things that's going on. Okay. So yeah, not a great deal of news because of the market shutdown. We're now into day, is it day 29, 28? I've lost track, really. I made a note of it in my diary early in the week where we were. Or perhaps I didn't. Yeah, day 28 was Tuesday, so 29, 30, day 31. So it's a whole month, day 31. Make a note of that. Of the government shutdown and President out on his Great Asian Tour this weekend with his government shutdown. Bizarre. But anyway. So that's today. This month, it's been an interesting wrap. Let's just do a quick wrap of where we are for. Where's my charts gone? Oh, I closed. What have I done? Did I? Oh, I must have closed. Sorry, I'm going to have to open it. Oh no, it's that one. Oh, damn it. Sorry about that. I closed the charts. Some reason I don't manage that. So what were we saying? We were looking at the Dow, weren't we, on the 5-minute time frame? It was short that got stopped out, and we went long, and then it's reversed. So we got to target 1. I probably would have pulled the stop loss up just yet. Maybe probably about here now. Stop loss halfway through because big candles, but it's really sideways. It's not doing much, but we're still long. So target 1's been hit. The second half might be getting. Yeah, I would have pulled up the stop loss on the completion of that candle there. I wouldn't have pulled it right to the start of that candle. I would have had it about halfway up this candle. So we lost on that opening trade. We were successful on this one. That one would have lost if it had triggered into the open. I tend to not do that actually on that opening candle and leave it. So that one would have been a success because it got to, small target obviously, but big stop loss. But the rule is take the money off the table when it's there. And the stop loss is now here. So I'm saying that now because I've seen I've been influenced, but I would have done about halfway of this candle. Initially, it would have been below this opening this candle low, and then we'd have dragged it up about halfway. So probably not got stopped out. If I'd twitched it as this was moving up or came down, I may have stopped it out. To be honest, but it's so let's assume the stop loss is about halfway down the body of that candle, 47. Let's put it on there. So yeah, that's what we were doing, weren't we? Yeah. So let's just go to the month then and see how we've gone. Let's just use the NASDAQ or the S&P for the indexes. So what sort of October has it been? Well, it's been, obviously we've had the earnings season, the big glut of companies reporting. I still plenty to go. We're only a couple of weeks in, but the big players, the big tech companies have all reported now. 5 of them this week. Mixed, very, very mixed numbers. We had that Google massive rally. We had a big short on Meta. It was down 12% yesterday, wasn't it? 13%. 11.35% yesterday. Oracle was off 7% yesterday. We've had all the central banks this week as well. But as far as the review of the month is concerned, stock markets continue to move higher. So this is our beginning of October is here. We had the panic on the 10th, thanks to Trump and his Nobel Prize, talking about ramping up tariffs again, particularly against China, and then look what's happened this week. So which part of that? There's the beginning of the month. So we are high. It's not, it's not. Again, September was higher here, so it's a similar to September buying opportunity on that Friday the 10th, and we've come back and we've gone to new highs this week, gapping here on the Asia noise, the deal. Rare earths are going to be opened up again. Tariffs on goods from China into the US, 47%, not 150%. So that's a relief for the market, but 47% still is still huge. But anyway, Anyway, so euphoria in the early part of the week. The deal was done. They met on Thursday. We were down Wednesday. We were down Thursday, and we're currently down today. But really quite small-bodied candles, so it's still quite stable. Going into November, the 20-day moving average sits at 6,740. 6,740 is my major, a key support area. I'm going to say my major. The 50-day is a wee bit below that, and the bottom of the Bollinger Band, 6,500. So 6,500, 6,700 key support areas as we go into November. November through to the end of April, that 6-month period, traditionally very strong for stock markets. And December, they talk about the Santa rally, the January effect. But from a tax point of view, where as well in the United States, nobody's going to be selling too much. We had the big churn in people's portfolios during that second half of December as well. So just stand by your bunks, hold on to your hats, and the stock markets continue to go up. When it pops, as I was saying just a few weeks ago about gold, it will pop quite significantly. But at the moment, stay on your surfboard, keep moving forward, keep dragging your stop loss up like we're doing with the Nikkei. Nikkei all-time highs again. Obviously, different situation in Japan, but big expectations for the new Prime Minister. So that could all turn quite pear-shaped as well. But at the moment, I'm happy to trail that one up and moving higher as well. So that's indices, generally very strong in the United States. In Europe, the DAX is the key indicator. You see for October, it's been a choppy sideways action. Politics around. We did get to a new all-time high at 24,700 at the beginning of the month, and we've struggled since, to be honest. Major leg down in that week. 3 week 4 we recovered a tad, but this week, final week of the month, has been down days after down days. So a week break of the 20-day moving average, and then we've been down for the rest of the week, and we're at 23,937 now, under the key 24,000 level on the DAX. So it's been a weekish month for the European stocks. Taking a step back, as you can see there very, very clearly on the daily time frame for the DAX, we're very much channel bound at highs, and we have been through the summer as well. So it's fleeting, these new highs, and again just eyeballing that, there's bigger red candles, isn't it, on a daily basis than green candles, body of the candles. I mean, you don't need to be a technical analyst or trained technical analyst to understand that. We're consolidating at this level. So, but then you can see here the lows are getting a bit high, but then we've pushed lower again. The highs struggle to get higher, and then we've gone lower again. So this is showing signs of weakness to me. And again, you can see that the stochastics crossed again there. Yesterday, is it yesterday the 30th? Yes, yesterday, and therefore we followed through today. Obviously, a lot of this will be profit taking for the month, balancing up for October. But European stocks, be wary. We've had some good earnings out of Europe. Don't get me wrong. The French banks yesterday, for instance, was pretty hefty. But DAX struggling across the channel. The FTSE has gone to all-time highs on the weaker sterling recently, and the pressure on the sterling and the pressure on the treasury markets and the Prime Minister and his embattled Chancellor. End of the month, the Labour government have pushed back the budget as late as they can. It's 26th of November before it's going to get rattled out. Lots of chat of taxes having to rise if she's going to stick to Rachel Reeves, stick to her fiscal rules. The hole is bigger. The growth isn't happening. It's a bit moribund. They're miles behind in the opinion polls. They're actually polling third behind the Green Party after the rise of the radical right in the Reform UK Party, the party that brought you Brexit. Anyway. So yeah, FTSE, a bit like the US markets, rallying really nicely. Easy ride for FTSE. So new all-time highs just yesterday. Wednesday out of the FTSE. So under last year, it was only up about 2%, where the US market up 20 odd percent. Terrible 2024 and 2023, but much better third quarter and fourth quarter for the FTSE here in London. So FTSE all-time highs continue to move. Looks a tad, well, not a tad, but looks significantly overbought. You can see here that we're at peaks for the stochastic crossing, and we had a cross, or we're having a cross at the moment. So watch that. We touch again, just using the rules of this strategy. That might be whether it follows through or whether we go sideways, I don't know. But we are at all-time, so that we'll see what that looks like. Obviously, it's a daily candle, but it's the end of the week, and it's also the end of the month. So if we go to the weekly candles, which I probably should have done for the month, really. Discussion. You see a strong last week, still positive this week, but maybe have topped out at 9,700 on the FTSE. Okay, that's the indices. Metals, everyone's favorite. Gold, 4,000 was breached. What a this is the weekly one. What a month it's had. So here, middle of the month, we went all the way, didn't we, to 4,400, and then turned around last week quite significantly and down again this week. So let's come down to the daily time frame. So it's still very well bid, but we've given away through the 4,000. It looked like we were finding support. In fact, we did find support at 3,900 this week. But it looked like earlier in the week, ahead of yesterday, that the 4,000 level was something in the rear view mirror. But we've had a strong day yesterday, a weaker dollar. So buyers back at 3,900 this week, and yesterday a strong positive day, and we're holding it currently. So psychologically, we're over $4,000. Technically, we're still in the under half of the Bollinger Band, and we're under the 20-day moving average, which sits now at 4,100. So that's that very, very strong rally is over. That's a leg. Is this leg down finished? Definitely too early to tell. We did have a strong positive day yesterday, so this is a bit premature. But if we just do a little fib level of that 4,400 or 4,375 to the 4,000 to the 3,900 low, you can see our 38.2 fib level. Our first key fib level sits right on the 20-day moving average, so that's making that resistance double technical levels. And the 50 position is at 4,200. And that's 61.8. Sorry, the 50 is at 4,130, and the key golden ratio, the 61.8 of that leg down. If the leg is over, I say it's really probably a bit too early to say that that's actually over yet. It's 4,190, but I'll just leave that on as we go into next week and next month. Let's have a look. What's that look like? I know a lot of you trade the gold market, so let's have a look what that looks like. Technically, yeah. So that's 2 weeks down from 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive weeks up. Not a surprise there. That's the longest run that gold has. If going back in history, that's what gold does. If it's going to have a run, it's never had a run longer than 9 weeks. I don't know how far this market will go back, but only to 2020. Yeah, I mean, other runs have never gone on more than 9 weeks. There's one there in 24. 1, 2, 3, 4, 5, 6, 7, 8. There you go. So at 3,330, 3,350 pivot area we had for most of the boring, non-trending, but still positive because it was in the upper half of the Bollinger Band, and then a massive breakout. So if this downtrend is over, so we got our second consecutive week lower, which we had since July, and that was a good move. Ahead of that was June the 16th and June the 23rd. They're more like the down level we got, and that was just consolidation as we were chopping around going up. This is a retrace, definite retrace of this 9-week rally. So a second week down, buyers this week, less volatility this week than last week. So we'll leave that on going into November if Trend Locker deems to hold that. Probably won't, because it's getting the big upgrade, isn't there, over the weekend. So you can see here on the daily time frame, looking to go long with this cross, but we haven't yet touched the outside of the Bollinger Band, so moving lower. We'll see where gold goes from here into next month. Indices we've done, energies we've done. We're still sideways very much on energies. We talked about crypto earlier. And let's have a quick look at the majors. The dollar crosses, dollar remains under pressure, as we said. So let's go down in order. In fact, let's go down in significance. So the euro trading today, 115.35 on the daily basis. You can see we're biased to the downside. We've been in the under half of the Bollinger Band since the end of September. So all of October, we've been under our 20-day moving average, and we've moving down in a looping basis. So our support has given way at 117, 116's given away, and we're now at the bottom of our October range at 115.35 and moving lower. If we look at the weekly, we see the turnaround from this consolidation range and the break a couple of weeks ago into the under half of the Bollinger Band, and quite a significant down week at the moment there. So 115 is the next key round number and line in the sand support for euro. Let's put that on. In fact, I'd make that so stay on, is it? But 115. We said 116 looked like it was holding. Move 17 for a while, but we've been gradually moving lower, following the central banks this week as well. So that's certainly one to look to be tested. Looks like that's going to get tested next week, if not later today. It's probably a bit too much of a move later today. We'll see what happens. So 115 is now the key support zone for euro dollar. Dollar yen 145 we've got back to today. Huge move up. We were long this yesterday. We've taken profit and it's now out, isn't it? Dollar yen. Yeah, we closed. It was 30 pips we took out of that. It was held. It's the end of the month. I've closed it out. It was a also one. So there's that dollar yen. It's got to its target. We got in at 154.099 and target was 154.40. That's 31.0 pips we took out of that, and that's closed now on that one. That's what those lines were. So yeah, where are we? Daily, you can see where from the yen coming back a bit there at the end of September, coming into the beginning of the month. So we started the month on the first here, all the way down at 146.60 at one point on the 1st of October, and here we are at 154. So from 146.60 to 154, it's been a very strong or a very weakening yen again. It's not the strength of the dollar; it's the weakening of the yen, given Takemichi's outlook on reinvigorating Abenomics. She obviously have her own twist So yen continues to weaken. The Bank of Japan painted into a corner, and so the trend up continues. You look at the weekly here, going for October. It's been a very strong move for October. It was okay during the summer. We were flat, weren't clear what was moving up, but September took us high. It's been a very, very strong 5-week October move for dollar against the yen. The yen's weakened significantly. So 154. Again, we look at this weekly chart. Next level is up there at 156, and then it then brings in 158, and then that chatter of 160, which takes us all the way back to June last summer. So 18-month highs for dollar yen. If we get back to the 160 level, that's certainly 154 getting attacked today. 155 next week potentially. But whether we get some interaction from our intervention, not interaction, intervention from the Bank of Japan during November, we shall see. But again, that remains bid to the upside. Dollar CAD back to 140 as well. The Canadian data today wasn't great. Hasn't been great all month, to be honest. And again, you see the count of 5 weeks of October to the upside. So consolidation lasts 2 or 3 weeks, but a strong start to the month has continued from the support down here at 138 and up to the upside, but sideways action the last few weeks. So again, bid, no reason to be looking to offload. That does look a bit overstretched on the weekly. We've got the daily still nice run last week and the weeks before, come down a bit this week, but bounced significantly yesterday and again today. Dollar bid, weaker Canadian data. There we go. That's a key buy yesterday. Dollar CAD didn't actually. That strategy would have taken it. You'd have got a target one there. No, it's very close, but risky roll. But it's more or less guaranteed as it's bounced up. But just stay with that. So that's looking strong into the. Positive into the month end, but again, there's month end numbers moving there. Euro we done. Aussie, I'll do the Aussie and the Kiwi and then come back to sterling and we'll wrap this up. So Aussie back to 65.50. We did spike earlier this week, over 66. It was looking quite strong again, but we've come back the last 3 days. Wednesday took us to 66, to over 66, key resistance there. But we closed down on the day. We got the RBA next week. We got the RBNZ next week. We'll come to those in a minute. But we're back over 65. So it's still relatively well bid, the Australian dollar against the US dollar from that breach of that 65 level in the middle of the last week. So 65 is a key pivot area. The 65 is all the way down there for us. So that's our big support area. 20-day is at 65.30. So will this hold? Might move back up here. We'll see how that goes. Kiwi, very similar pattern to the Kiwi, not as strong against the US dollar. So again, moved down in the latter half of this week. We were short this as well from yesterday. And again, that one's closed out. So dollar Kiwi, the Kiwi, is it still open? I think it might still be open, that one. Yeah, because it was in the money, wasn't it? The Kiwi. I've lost the lines. I had on this because of I think it's what does it say? That where's our target? Target is 57.04, and we've been as low as 57.30. So it's gone back against. I think I'd pulled the stop loss down to here on my trading platform because we'd been. I woke up this morning; it was going down nicely, and then it sort of retraced a wee bit. I was happy to hang on. I think that's probably been stopped out because I think I pulled the stop loss down to here as it went against us earlier this morning. I'm pretty sure that's what I'd done at 50. It doesn't ring a bell, that number though. 57.32. Sorry, 23. Yeah, I'm pretty sure that's closed as well because I got the stop loss really aggressive and closed because it's the end of the month. So that's, yeah, that probably is closed out now. Kiwi. And finally, so anyway, sorry, I was saying about the long term for the dollar. The Kiwi, it's down the last 3 days, and dollar's holding up against that. So the support is really the bottom of the Bollinger Band there at 56.90 going into next month. But you can see the trend here on the daily is biased to the downside. If you look at the weekly, it's been down for 5 or 6 weeks now. We've been under the 20-day there since the end of July, so all of August, September, and October to the downside. But you can see there on the weekly, finding support at 57 for Kiwi. And sterling also weak, 31.10 as we trade at the moment. So there's no Kiwi, there's a cable trade, so that might be frustrating. I don't know why that's in there. This is the weekly, and again you can see another one that's been a weakening for about 5 or 6 weeks now, and buys so under into the 20 under half the Bollinger Band here on the weekly chart, and sort of steady away, down week, up week, down week, up week, down week, and then a significant decline this week. We've got a broadening of the Bollinger Band. That's always a bad sign. Look left, where's the next support? As you can see here, that's where we are now, bang on 131. Next support sits through there at 129. So 130 on an end of week basis is irrelevant. Obviously, it's a big round number. I'm going to put that in. But you can see on the weekly time frame, hasn't played any technical significant levels. So 129 on the higher time frames is much more into play, as you can see there, than 130. But obviously 130 is next downside target for cable traders going into November. So weaker sterling ahead, I'll say the key budget, but it's been a bad week for sterling as well, moving lower. May see some resilience or bounce next week, but the key thing is this week is that we've broken below that summer low at 132. So the 132 area is given way, and it's given way quite significantly. So even here at the beginning of September, we're all the way up at 137. At the beginning of the summer or the middle of the summer in June, we were at 138. So it's been a big shakeout September and October for sterling, a very weak sterling. Look at this, consecutively lower days from the 20th of October. Last 10 days being dollar strength and combined with sterling weakness. So down we go, 131. 130 is calling, and as you saw on the weekly, 130, 129 on sterling. So that's a wrap for October, my friends. Anything else, let me know. It's a bit long today. What time is it? It's 2:30. Oh no, it's started at 1:15. Yeah, so an hour and a bit. Too long. So join me on Monday. We'll do some opening trades for the DAX, I think, on Monday. I think that's what we're doing. Can't remember. Obviously, the politics is still driving things quite significantly. And the shutdown, markets might start taking more of account of it now that the big tech earnings are through, but there's still plenty of big companies still to report. 87% of the S&P 500 have beaten expectations, something like 12-13% return on earnings for third quarter. It's very strong. But the teeth of the tariffs are starting to come through. The data, obviously, it's been delayed because there isn't any, so that needs sorting out. But we might see some movements elsewhere, both political. Obviously, today was that surprise news about potential attacks on Venezuela. Obviously, situations in the Middle East remain very, very delicate. Ukraine and Russia are still killing each other's citizens. It's a horrible story, and Trump has returned to Washington after a triumphal, very Trumpian tour of Asia, and all the trade deals and the signings and the shaking of the hands, and what do you call the meeting with Xi on Thursday? Amazing meeting Marty Schecker, one of the editors at Bloomberg, call it "Nothing really bad happened." Marty Schecker, no more surprises. That appears to be what's out of the way. Taiwan wasn't discussed. Nvidia's Blackwell chip wasn't discussed. Nvidia with an interesting announcement today. Deal in South Korea. Could be a real significant area deal with the South Korean party today as well. So Nvidia, the darling of the stock markets, they report earnings. I think it's the 18th of November. I remember writing them. Just bear with me a second. A week after the Chinese data gets. Sure, it's while I'm away. Oh, perhaps it's the 28th. Nvidia report results the 19th of November. I'm not going to be watching. I'm away. Just everything will be closed down. Come back afresh at the end of the month and see how we go into Christmas. But anyway, up until last night, we were up 1,253 points. We've bagged another 41 points this morning. And I think that Kiwi one has reversed as well. Euro yen is also out for 11 points. They were the other. Actually, let me just go through the ones. So Euro short, I think that's still open because it's a major one. These ones, the ones I check in the morning. Yeah, Euro yen was closed for 11.3 points. Yen was closed for 30 points because it did get to target one. I've closed that down altogether. And Kiwi, let me just have a look at that. It was, what did I say? It was 57.04. I think it's because it's reversed. Pretty sure I'd pulled the stop loss down. There's, that was daily. Let's go to the 1 hour. We were showing you before. Yeah, so this had, it was down. Yeah, I'd pulled it down to about here, I think, hadn't I? So I'm sure that stopped out 57.20, something rings a bell. Yeah, but anyway, the target was down here, 57.04. Hasn't got there, but we're in the money. We've made a few points. We got in at 57.44, so there may be 15 points on pips on the Kiwi short as well. But those three are all closed. These three are all closed. Euro, yen, dollar, yen, and Kiwi yen. The euro from 115.70 is still open because it's an end of day. That's the only one that's going to be open. That and the Nikkei are going to be open going into. I've lost it. Yeah, I've lost. 15, 20. It might have actually hit target one. I might. It's. What was the target one? 15.40. Yeah, right. So that's hit target as well. 15.41 from 15.70. That's 30 odd points. That will have closed half of it. This is the way my battery's running low. All right. Okay. There we are. I'm going to close now anyway, friends. So that's hit target one as well. So it's another, but that's half of that is still on the still open, and the stop loss was all the way up here at 16.20 at one point. I'll have pulled that down. Probably through here, 15.60 or something later on. But I'll update the Discord group for everyone. So that's it, target one. Those three are all closed. The euro yen got to target one, dollar yen didn't, and the Kiwi didn't, but they've been closed with gains. Sorry, dollar yen did. Yen was 30, euro yen was 11 points, and Kiwi, I don't know, was probably about 15 or 12 points. And the euro dollar's hit target one, and that's another 15 points to the good. And the only open trade is half of this euro position as we go into November. And this Nikkei position, which I will have may move the stop loss again before close. I don't want to get too close and get a bit choppy, but I'll probably be moving that up later today. It's just 4 hour Bollinger Band, the 20 period. So I might later on, but at the moment it's Q1 for 22 at the moment. So that's it for today. So it was a bit long today, but a wrap for the week. It was a wrap of the month. No data to look forward to. Have a quick look at next week. Next week is the RBA. If I look at next week, first week of the month, obviously that normally brings in non-farm payroll. That's not going to happen at the moment. It doesn't look like we're going to get a resolution from the Republicans and the Democrats. It's going to get very nasty next week potentially. US time clocks go back, as I said. So the difference, if you have moved your clocks to difference, it's a holiday start November in Japan and Russia next week. Major news for Monday. Actually, I might go live for that. Actually, as the S&P. That's the PMI. So that will be announced on Monday, I think. Let me just check my favorite calendar. I shouldn't say that, should I? Boss is watching. My favorite calendar is Forex Factory. So let's have a look for next week. Have they got the PMIs? In fact, they got the ISM. Yeah. So we got manufacturing PMIs out of the US. Monday's key data. Tuesday sees the RBA likely to keep rates unchanged. Here we are, the Aussie rate at 3.6. They may bit surprise markets, but I don't think that's going to happen. Was Tuesday Australian? Yeah, anyway, I thought it was expected unchanged from the RBA. Yeah, on overnight on Tuesday. Jolts won't come out. Kiwi jobs later on in the day. ADP won't come out. ISM may come out on the 5th, bonfire night here in the UK. The Bank of England and I think the Swiss National Bank not mentioned on 6 as well. But anyway, so it's definitely the RBA, definitely the Bank of England. They'll have something to say. Probably no change again from the Bank of England on Thursday, but I'll be live for that as well. There'll be no well, if this actually happens, they get a deal over the weekend, but it doesn't look like that's happening. There could be a massive Friday, the 7th of November, but just pencil it in. Obviously, the University of Michigan will release their consumer sentiment and inflation expectations next Friday. So main news next week is the RBA, but again, it's no change. Bank of England, probably no change, but anything central banks say is key. But do watch the PMI data as we start the new month and the second to last month of 2025 already, my friends. Where has the time gone? Anyway, take care, stay safe, have a fantastic weekend, everyone. Those of you celebrating Halloween, like I am, or we are, enjoy it and stay safe and be good. And may the pips be with you as ever. All the best, everyone. Take care.